Danger, Will Robinson. Danger.
Good day, beautiful people. D, how are you? So, over the past couple of weeks, I've issued a couple of alerts regarding the markets, and I've used shot across the bow and yellow alert. Well, it's now it's now red alert. It's time to really be concerned, to really take action as things are unraveling once again at a quickening pace. Today, the market closed slightly above a major support area. Crypto Arena has already violated it. And so, um, once confirmed, which I believe will happen this week, there could be a free for all, a free fall in the markets of significant degree. Um, what's known as a primary wave will unfold and unravel. And if that should happen, um, all things are possible with respect to downside and liquidation, et cetera, et cetera. Where they're rising, and the sovereign entities, the governments, Europe, Asia, are competing for capital in the global markets. So just take a look at what's recently happened. This past week, Japan announced that they had a negative GDP growth in the last quarter. And despite that, traditionally, one would they would want to lower their rates, but they can't. They can't because it's the only thing defending the yen. And if they should lower rates while the yen is falling, it'll only fuel the decline. And that becomes a very crashing state for them, particularly as it stands right now with the currency markets already um, in a state of I won't say default, but of where can one, what's the best safety harbor? And right now, everyone's in play, including the dollar. The only value that exists today is a relative value, which is temporal, but there's no absolute value, and that's why we've had this frenzy in the gold market for the past couple of months now. Everyone's looking for that safety harbor. I believe that's the reason why, by the way, they need to rush in and try and contain Argentina as quickly as possible. It kind of came out of the blue. So when you look at the global financial system, we're at an epic moment, you know. We're not at an epic moment because of this interstellar 3A 3I Atlas thing and our visitor, nor is it because that what's these things that are going on with our presidents, nor because of although they all contribute, the state of the narratives, the spins, the stories that we're telling people about what's real and what's not real. It's very shameful, and we're only making matters worse by prolonging it, normalizing it, and treating it as though it's just another day. Well, it's not just another day. This is epic. Um, and I'll show you a chart in a moment that you'll be able to see how we've been contained by these trends, and they're beginning to threaten breakdowns, which puts everything at risk. So, like I said, this past week, Japan announced that they had a negative GDP growth, and they won't be able to do anything about it. Here too, with all of the clamoring, almost demanding that the Fed step in and do their traditional easy money thing, they can't. Or they might be able to lower short-term rates, but they won't be able to to impact, let's say, 5 years and longer. In fact, they might even put them on a faster pace of rising yields. The Fed has raised rates. I mean, the Fed has lower rates. What now? 100 and some odd, 150 base, no, 100 basis points over the last year, and rates have gone higher, showing, evidencing that monetary policy has lost its way. Over the last number of years, it used to be that if a nation had a debt to GDP ratio of 70, they were considered un, uninvestable, third world. That wasn't too long ago. 70 was the sort of number, the maximum sort of number, red alerts. Well, today, and you can see it on this chart here, all the nations are two times that. In fact, Japan is four times that. That is why they are a prime candidate for default. Yes, Japan can default here. I've thought for a long time. They have the highest um, debt ratios per capita, number one, and number two, they have the oldest um, average age within their population. Just you know, meaning that they can't pay their way out. They can't earn their way out. These numbers are just extraordinary. So, and what's happened most recently is that as the global markets have begun to understand this demand for capital by the sovereign governments, the private markets are shaken by the fact that where are they going to get their money from? I think JP Morgan estimated that the private market's going to need 1.7 trillion, next year. A recent estimate. Well, they've already taken in that neighborhood this year, and now they're looking at what they have on their books, and they're saying that they've made all these investments mostly in the data center. Those debts, because of they won't be earning anything. They won't even have any sales for 3 to 4 years. Trillions of dollars have been invested with no prospect for cash flow for 3 to 4 years out. um, for 3 to 4 years out. On the hook that once everything is up and running, you know, billions will be made. We'll see. This is typical of a new technology, investment orgy, if you will, and we've done it once again. And now we're seemingly trapped. As the credit markets evaluate where they've made these investments, and they're all of a sudden waking to the fact that, oh, there's no cash flow here. So many of the institutions that have made these investments are now also being pressured. Their stocks are falling very sharply. You take a look at, let's see, BlackRock and this company called Blue Isle. These are major institutions, the largest, and they're falling sharply. And to show how irrational they've been, one company, BlackRock, the largest financial institution in the world now. Yeah. Um, Outside the bank system. Um, they syndicated a loan about 3 months ago. It was $150 million. They syndicated it. That means they spread it out to a number of people. And last week, it was declared insolvent, Chapter 7, meaning there's nothing there. So the markets have begun to question the policies that these institutions have been operating on, bringing the whole balance sheet, the whole ledger under question over the last week or so. So there's that anxiety, and so that's called in the financial world, that's called sort of a beta risk, if you will, the absolute level of things. the absolute interest rate level, the absolute level of your stock market. That's the beta. And then there's the alpha is what we call the relationship between, let's say, Microsoft and Apple. That relationship is an alpha relationship, relative value. So relative value and absolute value are in play here. And over the last, I would say, week or so, I've seen a gasping in the market. What a, and the gasping takes place when they do everything they can to jerk prices up, um, to jerk investments up, hoping that they'll find a bigger fool. You know, um, there's a there's a notion in markets where you buy and hoping that you'll be able to sell it to someone else, a bigger fool at a higher price. That's what's been operating for much of this year now. And so they've been gasping to jerk prices up to suck people in, create the momentum. That's all they've had is momentum. There's very little fundamental traditional value. They've all been those principles, those standards have all been blown away as we've operated in this mode of, greed. It appears more and more to be um, uh, to be it appears more and more that they've lost themselves. That's the best way to put it. Out of greed, they've been irrational, and now it's time to pay. It's time uh, to deal with the reality and the risk that's been disregarded, heretofore. It's all coming due. The bill's coming due. So, like I said, I've seen this gasping of late, and there's also been a desperation. The Fed has actually had, I guess, two meetings now, quietly, to try to contain and get everyone on board with what's happening, with what's unfolding. They've had some problems in the shortest term of markets, the banks lending to one another. They become unwilling, and that always sparks a crisis. If I'm early here in terms of what my expectations and how things are unfolding, it's because there's not at this moment an identifiable. Usually, um, a crash, if you will, is precipitated by a currency event, by a bank event, one of those two, usually. And I believe that they're happening, they're unfolding. The risk is now being seen or understood, but they're trying to hide them. They're trying to cover them up. But the market has um, begun to smell, if you will, a carcass, and it won't be gentle. It will eat. We're on that sort of verge. We've been here before. Signs are there. And we've just thought that we can dance through the dance through the uh, raindrops of warnings, and now they're just starting to pour down on us, if you will. So we'll see how things unfold, but be warned. They'll try to keep things together for the next couple of days until Nvidia's earnings later this week. They'll make every effort, but Nvidia, even key player, um, has broken long-term support, um, looking for a bottom, and major whales have now um, informed the markets that they've been liquidating. Whales are the biggest, sort of most aggressive players in the markets, and they've been doing it in the crypto market. And now more and more, it's coming out that they've been doing it in the stock markets with particular stocks. So the capital, believing that everything's okay, goes from one area and chases another area. Alpha risk is what it's called. Alpha rotational. There's a safe harbor over here, only to create a bubble over there, which will also pop as well. Problem in any prudent sort of way, without creating more chaos and tragedy for those not at the table, you and I. Well, at least myself. I don't know about you or all of you. So, but there, the good is that seasonal positive Fed. Again, I don't think that's going to be the case. Just like they're going to find out in Japan, they're not going to be able to, any more aggressive easing or easy money is going to make matters worse. That's the trap that they've put themselves in. We've got these excessive prices gasping, reaching, levels of valuation. And once the market goes to try to get cash, there's no I we can quickly find that there is no bid. Look at these charts and you'll see how, we've been in this channel, this long-term channel. We're at this upper peak of it. If and once we fail and start teetering down, it could very quickly look something like this. That's the way markets work. And I don't know that I've ever seen the sovereign markets, the sovereign debt markets in such peril. And I don't know that I've ever seen, as that was happening, the private credit demands so so high, so extraordinary. And that is why any whiff of private debt that's not clearly supported, the stocks fall, they crumble. Oracle and CoreWeave and so many, all these artificial, even Meta, has, I think Meta is down like, out of the last 19 days, it's been lower 18. No stability. While several, again, safe harbors are sky high. They will break as the market rushes to get out of losers and tries to get to cash. That's the way things evolve. That's the implosion. It's a mechanism that, again, it's just the way the system works. And here we are once again at this epic point where it seemingly is beginning to unravel, unfold. And the carnage, it's unlikely to be a good Christmas. Mm. And policymakers do not like to disrupt Christmas, but I don't see their way out here and now. Again, a worst case scenario I'm probably drawing, but believe me, big powers see what I see, the red, and they're concerned. It won't take much more to trigger their action, and every institution will have to move $1 trillion in an unstable environment. So we shall see. We shall see. So with that, again, red alert, beware, take action. Um, don't try to catch a falling knife, as they say, and observe. It's one for the. I think it could be one for the history books, here and now. Namaste.